Cool, I think we are live. Hello everyone, hope you're having a great day. Just drop a message into the chat if you can hear my voice all okay. We'll wait for a few minutes, for everyone to join. A lot of people coming in today to learn about MTD in the first quarter and the mistakes to avoid. And we're joined today with Martin, who's going to provide some great insight and learnings as well. So
hi everyone.
We'll just give it a few moments here until we kick off. So let me know where you're tuning in from, everyone, around the country. We're in London based. Martin, you're currently up north in Scotland still?
No, I'm in Newcastle. I'm back from Scotland.
Ah, there you go, Newcastle.
Yeah.
Oh, there's one. Oh, you put it in the chat already.
That was me. Yeah.
Crystal Palace, West London, Leeds, Blackheath, Windsor, Suffolk, Nottinghamshire. Got a lot all around the country, eh? Cool. Alrighty, well, let's kick off. So, hello everyone, and welcome to this month's webinar. And this is all about MTD is now live, and we're talking about the first quarter, first mistakes, hopefully not, and what sort of comes next. I'm Logan Ransley, co-founder of Landlord Studio. Really glad that you've all joined us today for what I think is probably most a practical, useful session we've put together, because MTD is no longer something that's just coming down the track, something that's being talked about. It's here. So joining me today is Martin Wardle, chartered tax advisor with over 25 years experience being a landlord and advising clients on exactly what we're talking about today, and also just navigating property tax. He works with landlords every day, day in, day out, on exactly all the stuff we're going through. So it's been really good to connect, and it's great to have you here, Martin. What did I miss anything from that intro?
No, thanks, Logan. It's good to be here today. I nearly said excited, but I don't think excitement is a word that should use in tax. So I'm glad to be here, and hopefully it'll make this interesting, if nothing else.
Awesome. So let's jump straight into it. Quick breakdown of what we'll cover today. So I guess the first one is what's actually changed now that MTD is live, what it means for you, what your first quarterly submission needs to include, and I guess a live walkthrough of how to submit those tax submissions through Landlord Studio, HMRC recognized platform. Third, the most common first quarter mistakes landlords might make, and ultimately how to avoid them. How to handle the tricky scenarios around joint ownership, etc., and I guess what the end of year declaration actually involves. But before we dive in, quick note on how today works. We'll have a live Q&A towards the end, so please drop questions into the chat as we go through, and then we can get to those at the end. And also, quick disclaimer, while we live and breathe property management and tax and accounting at Landlord Studio, I'm not a lawyer or a qualified tax advisor. Martin is, but in today's session, this is all just an educational session. So for the purposes of, just understanding MTD, we're going to share that today. But if you have any specific advice around your circumstances, etc., you should speak to your own accountant or advisor. So, Martin, let's start with a quick recap. MTD for income tax went live on 6th of April. And, that covers a few things around gross qualifying income for rental properties and self-employment. Maybe talk a little bit about that. Have we covered everything here? How is that sort of joint ownership of income, qualified income calculated? Love to get your input here.
So the simplest way to think about this is if you're in receipt of rental income, or you are self-employed, then it's the gross rental income and the gross turnover from your business that is used when calculating whether or not you're within MTD. And the first batch of people to go in are those with income over 50k. So when we say income here, we mean gross for all purposes. We're never talking about profit. So you might have 100k of income but not make any money. You're still in. So income over 50k, and that's if your tax return to the year ended 5th of April 25 had income over 50k. And I think there's an example there, well, there is an example there, sorry, of 32k of rental income, 22k of sole trade income. So you may be a window cleaner, a solicitor, you could be anything on, you add those two together and that gives you 54. And it's worth bearing in mind here that if you've got multiple sources of income, you have to do a submission on a quarterly basis for each of those sources. Now, that's not per property. Property is one source. But if you were also a solicitor and a window cleaner, which would admittedly be very unusual, you might have 3 lots of quarterly reports to do. The thresholds then drop in 27, they drop in 28. And I think if you look at 28, by the time we get there, even in the Northeast where I am, anybody with 2 properties will have to be an MTD. And by then, most people across the rest of the country with probably even 1 property will probably be in there. And self-employment wise, anything but probably hobbyist self-employed people. So if you're selling a couple of clothes on Vinted, you're probably okay. Anything beyond that, you're probably going to be thinking about MTD, if not immediately now, but certainly very soon.
Yeah, and if you've got property in London, for instance, you're almost, I mean, a lot of people are going to be swept in this year. Next year, you're almost guaranteed to be in just off 1 property, just based on those rents. Martin, I guess you've been speaking to a lot of landlords who are now a few weeks into MTD. What's the mood? Is it as daunting as people feared, or is it more manageable once you're actually in it? What's that sort of looking like?
I think landlords are in a perfect storm of place at the moment. The Renters' Rights Act has just landed, and I know you guys are talking about this at some point as well in the future. But you've got Renters' Rights Act and Making Tax Digital landing for landlords. And I think it's fair to say it depends on how long you've been a landlord, whether those things are scary and frustrating. So a lot of my clients have been landlords for 30 years. They now see these things as the final straw. For people who've only been in a year or two, they came in when there was already a lot of regulation. So a little bit more doesn't bother them. Personally on the Renters' Rights Act, for me, in the Northeast, we tend to like tenants to live in places forever. So the renters' right doesn't really affect us. MTD, I think most people get used to it once they see that the software can actually be pretty straightforward and sometimes saves them a lot of time anyway. So yeah, frustration, confusion.
Yeah, we're seeing that as well. And it's definitely a mixed bag of opinions and perspectives that we're seeing too. One thing that I want to be really clear about, quarterly updates are not tax returns. And I think there's some confusion around this. And you don't pay typically you don't pay tax on these submissions either. They're a summary of property income and expenses for the quarterly period. So Martin, for landlords who've maybe been putting this off and are realizing the 7th of August deadline is now closer or getting closer than they thought, what's the most important thing they need to do now?
Well, this might be an unsurprising thing, but I suppose you need to decide whether you want to do this or you want to pay someone to do it. Just the same as when you think about managing your own property, you might manage your own properties, and the Renters' Right Act might make you think, time to get an agent, too much for me. So, yeah, to be fair, the amount of effort you need to put into this will depend on whether you're personally doing it or not. Now, that's not me, could be anybody, but I suppose take a view on whether you need to do this personally. But from then, you really need to just log on to the system, get yourself registered for MTD. It doesn't take much. It will ask you for the sources that you're registering for. And I can see there's questions in there already about investment income, pension income. It's just for the rental income and your self-employed income. Anything else you can all but ignore for these quarterly updates. But again, in my example earlier, the window cleaner solicitor would say, I'm a window cleaner, I think this is my turnover. Solicitor, this is my turnover. Rental income, this is what my turnover is going to be. And then they will basically expect submissions for those income sources. But the key thing is you've just got to get on, at least register. I think worryingly, HMRC put figures out at the end of April that showed, I think, 865,000 people should have registered. And at the end of April, only a third of people had. So there's a lot of people just not doing this. So get registered first. And then I think the next thing is pick the software you need. You're going to see some good software today, but pick the software that suits the way you keep your records and suits your needs. And I think they're the two hardest things. Once you've done that, you can learn the software, you'll get used to it, and it's normally pretty easy after that.
It's interesting on those stats of how many people have actually registered. We're doing a report release on this soon, and it's still quite low actually, which is surprising.
Yeah.
So yeah, if you haven't registered for MTD, this is really the first step. Jump on the government website. On the guidance pages, there's basically a page on there that tells you exactly how to get registered for MTD. But yeah, this is a very nice segue into, I guess, how everyone's feeling about MTD. So just want to get a quick sense check on a scale of 1 to 5. How prepared do you feel right now for those for that first quarterly submission? 1 being not prepared at all, 5 if you're feeling really prepared. Drop those answers in the chat. Keen to get a sense of where everyone's at. There's quite a few 4s actually, which is good. A couple of 2s, 3s, 1s, bit of a mixed bag, but looks like quite a few people are feeling confident, which is good. When I ran this webinar, or one of these types of webinars a few months ago, it was a lot lower than that. So I think we've made some progress here. Cool. So yeah, let's talk a little bit about, I guess, what does a quarterly submission actually involve? Like I said earlier, you must be registered for MTD with HMRC before using MTD software, or if you're using an accountant, they can register on your behalf. But a common issue we're seeing is landlords signing up to the software first, but ultimately you can't link your HMRC account to software until your HMRC registration is complete. So it's really important that you do that first. And then basically once you're all ready to go first, what the first quarterly updates actually involve is really just a summary, again, like Martin was saying, of your rental income or self-employment income and allowable expenses for that 3-month period, the quarterly period. And this is reported under HMRC's standard categorization headings. You're not submitting every receipt, you're just giving HMRC an aggregate total for each category: total rent received, total repairs, total maintenance, total letting agent fees if they're managed, etc. So it's really, think of it as a condensed P&L profit loss for the quarter. And one thing that catches people out, quarterly updates are cumulative. Each submission is a running year-to-date total, not just a 3-month in isolation. So, if you spot an error in Q1, you don't need to go file an amendment. You can do adjustments, etc. And you're just correcting the underlying record as it flows through the year. But yeah, I guess any thoughts on that, Martin? Anything else they should be looking out for?
No, I mean, the key thing really is just to remember what you do, but also what you don't have to include. There simply isn't a space for any other income to go on there. Capital gains are still reported via the capital gains separate system. That's got nothing to do with this. And again, your income from employment, pension income, bank interest, dividends, none of those things are relevant here. So a lot of people who are getting very concerned and worried and frustrated at the idea of having to do whole load of work. It might actually just be as simple as running through your bank statements, tallying up your rent and putting your expenses on in a group kind of capacity. You can just put repairs, single figure. You don't need breakdown per property. It doesn't have to be complex. I would make a good argument that you should have that data somewhere though, because it's going to be useful.
Exactly.
And software like this will help you with that. But for the actual submission itself, it doesn't take a great deal of information to get it over the line. Just remember as well, though, if you've got joint properties, I think we've come on to this, you're going to need those figures for other properties, and you might not be the key record holder. So if you've got a joint property with your mate who you don't see, but once a year just sends you some money, you might have to say, could you also send me some quarterly figures, please? Because they need to be in there somewhere.
Yeah. And another question I guess we get a lot is, what if my records aren't fully up to date? Can you still submit and then, amend it later on? Is that allowed under the MTD scheme?
Yeah, yeah, I would say it's more important to get a submission done than to miss it, because you need to get into the habit. And as you've already said, Logan, what it is really confusing, but we're not submitting 4 quarters here. We are submitting a quarter. We are then submitting a 6-month window, a 9-month window, and then an annual. So any changes or any updates that come through, you just submit them as you go. And I think at the moment it's fair to say HMRC are taking a fairly soft approach. They're not going to penalise anyone too harshly on these quarters. But it's not beyond the imagination to imagine that down the line, 5 years from now, when they should have bedded in, if they just see people clearly not taking the effort, they will deal with that. So yeah, it's a good time just to get used to it and get it out of the way. Procrastination's not your friend here.
Yeah, and I think HMRC's sort of taken the approach of the first year as unpenalised, right, and then come second year when there's a further rollout, they're almost expecting everyone to be on top of it, and that's when they start to bring in the penalties, etc., which will be interesting.
Yeah.
So I think just to help people understand this a little bit better, might be helpful for me to show you through how this looks like inside Landlord Studio, and basically, I guess, what we can actually do to get registered, how that joint ownership perspective looks as well, and ultimately, yeah, how that's going to work for you. And one thing that I just wanted to cover off, Martin, what should landlords be actually looking for to know their software is genuinely MTD recognized, for instance, because we are seeing a lot of this online as well of
Yeah.
various things.
Yeah, I think this is one of those classic things, Logan, where if there's a big change in some area, a lot of software vendors are being opportunistic on making sure if you search on Google for MTD software or HMRC recognized software or a generic search term like that, you'll often find their own adverts at the top. The problem is, HMRC registered or HMRC certified could mean a lot of different things.
Yeah, exactly.
You need to be very careful that it's kind of ready and set up for MTD, which is a different thing. There's already been cases, believe it or not, of people buying software for corporation tax returns, even though they're not companies, and it's not going to help you with MTD. So be careful. Go to HMRC's website, see the list of people there, and pick one of those. Or even better, speak to someone who understands your portfolio, like your advisor, who can then, they know you and they'll actually help you as well. But obviously we're here today with Logan and the team who are going to show you, one of those options. But yeah, be very careful.
Yeah, we are seeing a lot of various products come out, and ultimately, they may not actually be recognized software. So it's important to go on that government website just to go and find ultimately products that are. So I'm just going to switch over to Landlord Studio.
Can I just?
Sorry, yeah.
Can I just jump in with one more thing there, Logan?
Yeah, of course.
Any viewers here and people who watch this back afterwards will expect Logan to say, get software. You will see a lot of talk online about how you can use something called bridging software. And that's basically fairly sloppy way, I would say, of linking your current spreadsheets to an HMRC submission. I think, although that is an option for people, I think you're then missing out on a lot of the advantages of having software. I say that as someone who has no vested interest in software, but I know that people who've swapped from spreadsheet or manual records to software, they often save time, have much better information, and they have much happier advisors as a result. Not saying you have to get software for my purposes, but it is normally better just to get something that's appropriate,
Exactly.
rather than try and have a kind of a crutch, you know.
Yeah, and bridging software is always quite interesting as well, because ultimately the bridging software is really just taking the figures coming from a spreadsheet, and those spreadsheets can end up very messy. So yeah, it's important just to look at all the options and consider everything before making a decision about going forward with your choice of product. But from a Landlord Studio perspective, very easy to get set up with Making Tax Digital. You just have to come across to their MTD integration side on the menu here. And then you'll see in there's basically an option to get set up for Making Tax Digital. One of the nice things about Landlord Studio is the ability to connect multiple owners to a single account. I guess one of the problems with traditional sort of accounting software is that in the context of MTD, when you have joint ownership and you have various splits of ownership on different properties, you need to aggregate that all into a submission. So inside Landlord Studio, you could actually connect multiple owners for MTD. For example, husband and wife basically allows you to then, bring them into one place and then do the submissions for both the husband and wife from one place and still count all the different percentages of ownership in one area. So once we're inside that quarterly submission, you'll just see instantly straight on the side here, the single owner that I've authorized has various percentages of ownership. And this is important because ultimately you may not own 100% of that property. You may only own 35% or 5%. This allows you to add all the properties in one place and then ultimately define your percentage of ownership against that property. And then all the figures from that one property then come in and are calculated correctly in the context of each quarterly submission. So once you've set it up once, then you just track income and expenses as usual, and then ultimately you can submit for both husband and wife. How are you sort of seeing this handled in other products, Martin? Say bridging software. How are they sort of handling the joint ownership side, particularly?
I'm not really looking at bridging software, Logan. I'm really not a fan of it.
Yeah.
I honestly think it's so much easier just to have one bit of software that will actually do what you need. But depending on the software you look at, I think some of the options out there are simply not suited to landlords. If you take Xero, QuickBooks, Free Agent, they're all good accounts packages, but landlords tend not to use the same terminology as accounts packages. And they all have varying degrees and ways of, I suppose, tailoring the reports and the information you get from them. Whereas something that is for landlords that can also do the MTD thing will often give you better reports. For instance, Xero doesn't easily give you a rent statement for one of your tenants. It can be done, but it's not out of the box. So that type of thing is really quite hard. And also, they've all got different ways of connecting multiple people. So some will charge you an additional license if you want the information to be used by others. Some of the free software doesn't allow your accountant to then also check in on the figures. So that's a trap. You can sign up for some free software, but then it's not actually usable by your agent. So just be very careful. And again, this is where a good conversation with someone who knows your portfolio and your tax will actually help.
Yeah, and just a point on, I guess, what you were saying around the property side. I guess that's where we sort of differentiate alike, where essentially a traditional accounting software is just one ledger of income expenses that you log, and to split that out into different properties is quite challenging. Whereas if you use a property accounting specific product, you can actually obviously set up each individual property to track income and expenses on. But then, sort of just going beyond the accounting side, particularly if you're self-managing as well, it'll good property software is going to obviously allow you to track all the tenancies and generate reports. And one of the things that we've brought into the software, particularly around the renters' rights stuff, is being able to have all those certificates and guides and things in one place, which just makes it a little bit easier to use just one software instead of multiple. So yeah, hopefully that's given you a little bit of an experience of how it all looks, and yeah, how it sort of can work for you. There are some questions around organizational expenses, and saw a few things in there around overseas properties, which I'll come to at the end. But just to sort of summarize how connecting Landlord Studio to HMRC works, basically you just log in there. As long as you're MTD registered first, then you can jump in, connect your HMRC account and the gateway account directly inside, and then you'll be good to go from there. And then obviously multiple owners can be done that way as well, all from inside the one account. So, but yeah, jump on the government website again, check out all the other products just to see what is going to be the best suit for you. Now, want to jump into some common mistakes landlords are making. I know, Martin, you've been speaking to a lot of landlords in real time. What are some of the mistakes that you're seeing? Is there anything that's surprised you at all?
Um, I think a lot of the mistakes probably are continuations of things that have always been there, but this just flushes them out. And what I mean by that really is, I do a lot of talks to landlords and property professionals, and I've asked them various things over the years. I used to do, fastest fingers, 10 things all landlords should know about tax. And the average score, Logan, was 3 out of 10. And I did that, probably a couple of thousand people answered it. So what we're now seeing is the people who are really good probably still aren't actually exceptional at tax advice. Not this, I don't mean this to come across as condescending or arrogant in any way, but a lot of people already don't understand tax. So then trying to use that knowledge, which has got gaps in, to then do something like this. And I think it's very easy to assume that if you've got a bank account that you link to software, then you're done. But actually, a lot of the questions we're seeing in the chat, which I presume we'll come on to later, already show the confusion out there. I think the biggest mistakes people are making, though, is, I've got clients who just said, I've just asked my agent to send you all of the rent statements. So I'm like, that's good, that's a start. But they don't see all of your expenses. They don't see your mortgage interest, probably. They won't see your insurance, probably. They won't see the bigger expenses that you tell them not to handle because you want to price it, shop around. So I think there's a lot of false safety that can be put in here where you just think, well, I've done it, I've submitted. But it's more than that. You need to really put some proper thought in. And again, proper software, if nothing else, setting up the software forces you to think about these things as well.
We've got a lot of landlords that use agents, and I think the assumption is they just get the statement, send it off to the accountant, good to go.
Yeah, no.
And I guess just coming back to this, we've been hearing a lot of the same questions from landlords in the community, and one of the ones that I've been particularly surprised around is for these quarterly updates. Landlords think, they can just submit a zero statement, zero income, zero expenses, and then just fix it at the end of the year. we do not advise this. It's if you have real
I think,
income, sorry, go on, Martin.
no, I was just going to say, I think it's easier to solve it than it is to find a way to get out of it. I genuinely think that. And the reason I think that is, even though there are fairly soft penalty regime for the first year, in time, HMRC will spot this a mile off. Imagine if a landlord says nothing, 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 nothing. Well, yeah, I got 60 grand and spent 40 grand on expenses. That's just a blatant admission that you submitted for incorrect quarters. It's just a huge red flag. So again, I think now you might have a commercial rent. Somebody asked there about commercial and resi. Yes, all rent is in as long as it's done by an individual, not a company. So a commercial property, you might get a flat 18 grand a quarter, and it might be tenant repairing and tenant recharged, everything else. They might seem fairly static submissions, but most landlords won't have static, unchanging quarters. So you may as well just bite the bullet and get it right. Just use this as the practice year that it really is, while there's soft penalties, and just get it right. Because otherwise, when you have to fix it down the line, when the penalties start coming in, you'll be doing it under duress. And again, the time to start is now, not July, because people like me and Logan's teams will be much busier then. If you want good advice, try and get that advice earlier, I suppose. But yeah, you definitely can't just hit 0 or just divide last year by 4. You really shouldn't do that. You just, again, it's a crutch. I don't bridging software as a crutch. I think submitting zeros and estimates as a crutch. Get it as close as you can.
Yeah. Another one that we've seen as well, repairs versus improvements. Repairs like fixing a boiler, repainting a deductible, improvements like an extension or a brand new kitchen, I guess would be considered capital costs. Is that correct, Martin?
Yeah, so again, this is one of the areas where a lot of people just simply don't know the rules. So then if you don't know the rules, how can you report quarterly? Now, if you've got an advisor, in theory at the year end, they will pick this up as part of the final submission. But a good tip for anybody here who wants a really simple, nice, easy to understand thing is HMRC actually have something called a property mental toolkit. It's often updated very late in the year. So the latest one you'll get now is probably for the 24-5 tax year. But it has sections in there about what allowable expense is, what you can't do, how to do it. But yeah, you've just got to make sure you're claiming the right figures. None of the tax rules have changed. All of the things you used to submit on your year-end return are exactly the same. If you used to be able to claim for the replacement of a broken window or a kitchen renewal, that hasn't changed. If you go into the loft, that was always a capital enhancement. You never should have claimed that. So these things haven't changed. But I think just forcing people to think about this quarterly will just make the question come up. Again, it's not asking a new question. It's probably just reminding people that they maybe didn't know these things anyway.
I mean, if you have any questions about this, definitely worth chatting to an accountant. And yeah, even reach out to Martin to see, engage with his team, etc. But yeah, definitely worth getting some advice on if you're unsure. One thing that I saw in the comments was around the letting agent gross versus net rent. So this is obviously a big problem workflow wise, because statements often are the source of truth for a lot of your income and expenses. If you use a letting agent, you have to report the full rent from the tenant, not just net rent, and then record all the fees separately as expenses. You can't just use the net amount that arrives in your bank account. So that's really important to get right. We've got some features coming out that will help with that, including being able to drop your letting agent statement straight into Landlord Studio. Or if you're using an agent, we already have a product that will do this for you called Nexus, which you can check out online. And then, one of the final... Sorry, go on.
I was just going to say on the previous slide there, Logan, it's not just the agent's commission. It does say on there the expenses, but if they organise your gas checks for you as well, there's actually three components there. There's the gross rent, management fee, and in that example, the repair cost. So it's not always just one figure being netted off. You've got to be very careful.
Yeah, there's any expenses that the agent's taking out of your rent float if you have an agent, and paying for things are considered expenses that you're paying for, essentially. So important to get all that information. Yeah, and finally, the joint ownership scenario, which I sort of covered up in Landlord Studio side. But yeah, essentially, you report based on your share only. If a property is jointly owned, you only report on the share of income expenses based on your percentage of ownership. Whether that's 50-50 or you've got interesting splits like 70-30 or multiple owners, ultimately you need to report on, for your particular tax submissions, what you actually own in each property, or aggregate across all the properties. And this can be handled really nicely inside Landlord Studio with the ownership feature. So yeah, definitely check that one out. But any additional comments around this, Martin?
Yeah, this is actually something that I see probably it's the second biggest reason why HMRC tap on people's doors and ask why they haven't been declaring rental income is the ownership. The biggest one is they just thought their mortgage payment in full was allowable, so they made no money. We'll not get into that. But the next one is, oh, well, actually, I'm dealing with a case at the moment where a lady bought a property jointly with her father many years ago because she couldn't get the mortgage in her own right. She moved out, rented the property out. She's been declaring the rental income, but actually half of that rental income is her father's. So a really good, simple time now is just to make sure that the ownership and the declarations match. There's mention on there about Form 17. It's a really powerful tool for married couples and civil partners, but not being used, kind of without proper thought. But make sure you're doing your basic tax planning. If you've got a high earning spouse who's bought the property and a non-working spouse, allocate the rent to the non-working spouse and possibly save tax. It might not get out quarterly updates, but just good basic planning. And I think my final point on this, Logan, as well, is there's a lot of talk, and I've seen LLPs mentioned in there. If you've got an LLP that owns the property, so long as it genuinely does, you don't have to do this. LLPs are excluded. Partnerships are excluded as well. But I must stress that HMRC don't think that a jointly owned property is partnership property. If Logan and I had 20 rentals, we would just have 20 joint investments. We wouldn't be a partnership. So I think a lot of people are looking at this thinking, this doesn't apply to me because I've read that it doesn't apply to partnerships. But that's not the case. Partnership on pure rental income is very, very rare. So yeah, just make sure you're covering the basics.
Some great points in there. Yeah, and I just want to move on to, I guess, the final declaration. Been focused on the quarterly submissions, but let's just spend a few minutes here on that end of year picture because, this is where everything comes together and where the quality of those quarterly submissions actually matters. Maybe just tell us a little bit about that final declaration. What does it look like, Martin? What's that process?
Yeah, so it's similar, but not the same as what you've been doing previously. It's very similar to a year-end self-assessment return in its nature, in what it's hoping to do. But basically, the 4 quarters will drop in to this. You can then make any adjustments at the year-end. And it's worth, I'll come on to this, but I'll stress that if you're using software that links to your bank, not every allowable expense goes through the bank. You might have travel costs at a mileage rate, for instance, that doesn't exist in a bank line. So you've got to make sure you get all those year-end adjustments out. And then you submit the final declaration. And this is where you then put in all of your other things. We've seen mentioned in the chat about pension income, employment income. Now, this is where they go in. And it's due for the current year that we've just started, 31st of Jan 28. Again, I saw a question up right at the start. Is it January 27? No, it's the same as when you would normally submit the tax return for the year that you're doing. So again, most of the dates, tax payments haven't changed. This final submission is going to be where you put everything else in. And if you've done 4 quarterly submissions that are absolutely perfect, you won't touch the rents again. You will then just add your other bits and pieces on.
And typically, how most landlords are using Landlord Studio, because your accountant may need to bring in other things at the end of the year. Typically, you do the quarterly submissions out of Landlord Studio, and then the accountant at the end of the year will typically do that final declaration in their own software,
Yeah.
and they'll bring in everything else that you have otherwise. So that allows you to just stay on top of the submissions through the year, and then accountant can sort of stay on top of their typical process that happens at the end of the year. So yeah, I guess that's a bit of a summary of what's happening, the MTD quarterlies, final declaration, etc. Sort of brings us to the end of the webinar. I want to spend a little bit of time here on some of the Q&A that came through. See if we can bring up some of those questions that people had. So I'm just going to go through and just bring up a few questions. So rental income, again, is minus admin fees, vendors fees, so business account does not see my rental income. How do you get around this? So in Landlord Studio particularly, you can set up things in the bank rules to automatically reconcile, split out the transactions that hit the bank account with those additional other things. In the case where you're getting consistent rent each month and there's no changes, no surprise costs, etc., that breakdown is going to look pretty similar month to month. But it does allow you to jump in there and make any additions as well. There's that, and then we have a rental statement import feature coming as well, which is going to just help that process a little bit more. I know there's questions on overseas properties. So right now you can set up overseas properties. We only allow you to track in one currency. We are planning to change this so that you can track in the alternative currency. And then there'll be an exchange rate that basically converts it. I'll reach out to everyone in the follow-up email to give an estimated time on that. But basically, you can already add your overseas properties and track the income on those properties, which ultimately do get included in. It's just a currency feature right now that needs to be changed. Here's one for you, Martin, potentially. A plot of land that is rented to a farmer and paid annually. Should this be on the quarterly submissions with other rental houses?
It said it was annual but paid quarterly. It disappeared just before I read it.
There we go.
Well, it's paid annually, yeah. So most landlords submit on what's called a cash basis. Now, the cash basis means that you look at we'll just say the 3-month and 90-day window, and the things that physically went in and out of the bank in that window is what you submit. So on that example, if it was, £1,000 a month paid once, you would have one of your quarters would show 12 grand, and then you'd have 3 empties. Now, the bigger you get, you can't then do that. You have to do basically what's called an accruals basis. So you'd have to say, well, actually, I got 12 grand in a single payment, but it was £1,000 a month, and you would show the 12, the 12 lots of £1,000 across the quarters. Most landlords, though, don't do that. You just base it on what's in and out. And there are thresholds, etc., that you probably need to speak to your advisor about, because it depends what else you've got going on as well. But the simple answer for most people is it's just the money in and out. So another variation on a similar question is, I've got a tenant who is supposed to give me £1,000 a month, but doesn't, and they then catch up in month 4 and give me 4 grand. What do I do? 0, 0, 0, because that's what happened. You'll then have double the rent for the next quarter because the catch up plus the normal rent resumes. So yeah, it's normally just the money in and out. Same goes on a big bill. You have a 10 grand repair. It might be a June invoice, but if you don't pay till September, September is when you put it in there.
Nice. Hopefully that's answered your question, Kristen. Another one around mortgage interest. Mortgage interest is an expense, so it should go on the quarterly submissions. Is that correct, Martin?
Well, it's not an expense in the same way. So probably not is the strange answer. You got to remember here that mortgage interest isn't a straight deduction of profit for these purposes.
That's right.
So yeah, it'll probably go on there, but not expense is technically the wrong word. You get a tax credit for it. But again, it's probably not the end of the world because there's a lot of things for. So if you've got a repayment mortgage, for instance, HMRC have said just don't tell us anything because you won't know the interest until the year end when you get your statement. So they said you can just put all of those things on that fifth adjustment, the final submission. So I wouldn't worry too much about your mortgage interest as long as it goes in somewhere.
Cool. We'll take one more question before we wrap up. There was a question around having a business bank account.
I was going to flag that one. Yes, someone asked about it. I think this is something that's been overlooked for years. I just think it's good housekeeping to have a separate bank account for your rents and then a separate one if you're this mythical cleaner who's also a solicitor. I would just have 3 separate bank accounts. Now, you don't have to, but the 2 reasons why it's useful. First one is if you link a bank account to Landlord Studio, if that was me and it was my current account and the rent was in there as well, there would be probably 500 transactions a month from all the coffees and everything else that I do. You're just adding a lot of noise to the software that doesn't need to be there. I'm sure you could just say automatically ignore Costa every time, but it's also just easier if it's not in there, getting muddy and things. But the secondary point, rather than just efficiency, is if HMRC inquire into your affairs, they can ask you for all records relating to the thing they're inquiring about. It's much easier to give them a single bank account that's got monthly rent, mortgage payments, and the odd expense. That isolates their eyes away from everything else you get up to. I'm not saying that so you can then hide everything else somewhere else. I'm saying it just ring fences their inquiries. So very good practice to have a separate bank account. Doesn't have to be a business bank account, but a separate account.
Nice. Yeah, hopefully those questions and answers have helped clarify a few things for the people, and we'll send out some resources as well in a follow-up email. We've got a whole lot of resources on our website, but again, if you do have any specific questions, please reach out to a tax advisor, accountant, Martin's team, and yeah, you can inquire about your particular scenario and situation. One thing I just want to flag for those in the audience, we do have an upcoming webinar on the renters' rights stuff. It was mentioned today. We'd love to see you there. We'll be going into all things renters' rights, Section 21, etc. So definitely jump on that if you're interested. And we will be also sending out a copy of this this replayed webinar shortly after today, hopefully by the end of the week. So look for that in your email as well. But yeah, just want to say a big thank you for joining us today, and to you, Martin, as well. Really appreciate all your advice and commentary around this.
Thank you very much.
Yeah, we really appreciate that. So thanks everyone else for joining. Hope you have a great rest of the week. Enjoy the sunshine if you have it around you, and we will see you in the next webinar.
Good luck, everyone.